and welcome to Finextra. I'm Hannah Wallace and we're here at EBAday 2018 in Munich. Joining me now is Henrik Lang, Head of Liquidity at Bank of America Merrill Lynch. Hello Henrik, how are you?
Very good, good afternoon.
During your time here, what would you say are the key topics of discussion?
Look, first of all, it's a fantastic conference. I'm truly enjoying it. And first of all, I'd like to compliment the EBA. I think this is the first time, after a long time, they're trying to bring in liquidity as a topic of discussion into something that historically been a payment-specific conference. So from that perspective, it's really, really good to see that. I'm very excited about that. I would say there are three themes I'm hearing from my peers and the providers here. The first one is around real-time payments. I think that's an area which is great interest to everybody and definitely having an impact on liquidity management. The second one, very hot topic, innovation in technology and in product as well. Very, very exciting, a lot of discussions happening. And of course, the third area is regulation. There is still a lot going on regarding GDPR, PSD2, capital regulation, money market fund reform.
So it's been 4 years since the introduction of SEPA. Would you say the speed of account rationalisation has been strong in the euro payments arena?
Well, SEPA was probably one of the greatest financial integrations in the world when it was introduced 4 years ago. But in order to understand the speed of account rationalization, you need to understand how corporates operate. It takes a long time for corporates to change provider, to review their account structure and potentially to simplify their account structure. So 4 years might seem like a really long time in the life of corporates and in the life of treasurers who are very much a risk-averse professionals. It's actually not a very long time. I think what's really important is that SEPA created the foundation for a lot of the new innovative themes we are currently seeing, for example, at the EBAday here as well. For example, virtual accounts is very much dependent on having that strong foundation of SEPA. Real-time payments, again, very much reliant on the foundations of SEPA. And of course, PSD2 and APIs are also reliant on SEPA.
Okay, and what do you foresee will be the impact of real-time payments on liquidity management in EMEA?
Real-time payments will definitely impact how both corporates and banks manage liquidity. Some argue that it will fundamentally change liquidity management going forward. The way I see it, there are both opportunities and challenges. What are some of the opportunities for corporates? For example, they will have better use of funds. They will initiate a payment and within seconds they will receive the payments as well and the funds. There will be a lot more transparency, information about the transaction flow. But there are some challenges as well, and those challenges are not small. Corporations will need to review their entire treasury operations, make sure that they are capable of supporting transactions 24/7. They also need to review their ERP systems, their broader payment infrastructure, make sure that those technologies can support real-time payments. So I would say there are opportunities and challenges, and I think corporates need to balance both.
And finally, there's no doubt we're experiencing a growth of innovation within transaction banking. Could you talk us through some of the technological advancements that are changing the way corporates manage liquidity?
Yeah, there are many, many different areas. I would like to highlight maybe two specific areas. Over the last few years, cash flow forecasting comes up on the top of every corporate treasury surveys. You know, it's something corporate treasurers are really interested about improving, primarily around the accuracy. Where innovation comes in, we spend a lot of time with fintech providers trying to combine data sources, both from their own ERP systems and also from the bank systems, and apply machine learning and artificial intelligence to try and improve the accuracy of those cash flow forecasting methodologies. So I would say that's one key area. The other area, which I think is really ripe for innovation, is virtual accounts. Okay, tools like notional pooling, physical cash concentrations, been around for a long, long time, and I think virtual accounts is a real challenger. One of the challenges corporates have is opening, closing accounts very swiftly. You know, it takes a long time sometimes to open and close those accounts. With virtual accounts, this is a question of seconds. So I think virtual accounts will fundamentally change, or has the potential to fundamentally change how corporates manage liquidity. Historically, people have seen it as a reconciliation tool. I think now they are exploring broader usage of virtual accounts, especially within the liquidity management space.
Wonderful. Well, Henrik, thank you for your insights. It's been a pleasure.
You're very welcome. Thank you.
And thank you for watching.